Hello everyone, George DeSantis here, back in the Big Apple after doing some traveling for the last 3 weeks or so. Uh, so let's take a look at what's happening in the market. Since we last took a look at the market on July 21st, I believe it was. We'll start off by looking at the disclaimer first. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice, since I am not one. Let's begin by looking at some of the charts here. We'll take a look at the weekly chart of the S&P. On second thought, before we look at the weekly chart, let's see what the bigger picture looks like by looking at the monthly chart. So on the monthly chart, what we see is that the 4 EMA is above the 9, and the 9 is above the weighted moving average, 30 weighted moving average. So in terms of trend lines, the trend is still up since it began somewhere back here in somewhere in March of this year. So we still have a nice uptrend on the monthly chart. The parabolic is below the most recent bar, although this candlestick here is a bearish engulfing candlestick. This body completely engulfs this one. So it's quite possible we're going to see a further pullback. That's really a possibility, real possibility. However, when we look at MACD is still in bullish territory. We see Shiken money flow is still looking pretty positive. Williams percent R is above the 20% line, and RSI 12 is above the 60% line. So as far as the monthly chart is concerned, that's pretty bullish. Let's turn to the weekly chart. Now on the weekly chart, again, we can see this ominous divergence of MACD from price, and we can take a look at what happens here. We make a high, MACD makes a new high. We pull back, we retrace here, MACD retraces here as the market pulls back. And then as the market makes a new high, MACD makes a very much lower high. So this is where we had that bearish divergence, beginning all the way back here really. And now it seems to be playing out as we see price pulling back here. Now what we have here in terms of the weekly chart is that price is now in a buy zone. The buy zone, according to the 930 approach that Rick Monteith talks about in his website, eFuture Vision, is a close between the 9 and the 30. So right now we have this market in the buy zone between the 9 and the 30, a close between 9 and 30. Notice that I drew in a horizontal line here at 2400, and that is that watermark that we've been looking at, that support level, and we are still holding above it. If we break below 2400, all bets are off. We're probably going to have a much bigger decline. So we'll have to keep a close eye on 2400. When we look at MACD histogram, we can see that MACD histogram now is in bearish territory. So this pullback, this bearish divergence may be playing itself out here. And the Shiken money flow pulled back a bit, quite a bit, but it's still in positive territory. And Williams percent R, while it's declined a bit, is still above 50%, and that's my line in the sand. As long as it remains above 50%, I think we're in pretty good shape. RSI 12 just crossed below the 60% line. So all in all, the weekly chart is still in bullish territory vis-a-vis the Shiken money flow, but it is now showing that culmination of the what we hope is a culmination of the bearish divergence as MACD pulls back into bearish territory here. So we'll wait to see now, does this hold? Does 2400 hold? Is this really a good buying opportunity? Next week will tell us. We're sitting at 25 points above this watermark. So this is the daily chart of the S&P 500. First thing we should notice is that parabolic went above the most recent bar, telling us that this is now switching to a downtrend at this level here, this point here, a couple of weeks ago. And since then, the parabolic has remained above all of these bars, and including the most recent bar. So the trend is down, according to parabolic. Now, we have the Bollinger Bands at a standard deviation of 2.7. And on the lower band, we hit it once, we hit it twice, and we're continuing to hit it here again. Pretty soon, we should see a reversal of this, because this is a correction within a bull market. That's my interpretation of what's going on. And of course, here you have your 2400 support level. And as I said on the weekly chart, most likely we will hold. If we don't, then we have more pain to come. MACD histogram is trending down even further here. Shiken money flow holding just above zero. Williams percent R sort of spiking down again to that line, and that 80% line. And when it did that previously, and I can show others, other instances, it tends to rally from there. So let's hope we get the same movement as we had before, where price recovers from here. RSI 12 is still below the 40% line, so that's pretty bearish. Let's continue then by looking at some other charts. And before we go to some of the individual charts, individual stock charts, let's quickly review. The monthly chart is still bullish. The weekly chart is now in the buy zone, as we saw earlier, and the daily chart is hitting the 2.7 standard deviation of the Bollinger Band on the downside, the lower band. So my inclination is to say that we hold at 2400 and we rally from there. We might even hold right here at 2425. So let's start looking at some individual charts. So here's a weekly chart of Apple. We can see that the 4 EMA is above the 9 above 30, trend is up. I'm going to go a little rapidly, but you could always replay these videos. So I want to cover as much as I can in the 15 minutes we got. Parabolic below the most recent bar, trend is up. MACD trending up from below the zero line. According to our friend Alex Elder, one of the best times to be buying a stock is when it is trending up from below the zero line. We have Williams percent R above the 20% line, and we have RSI above the 40% line. So let's take a look at the daily chart. On the daily chart, we can see trend is still up, but we're pulling back a little bit to close right here in the buy zone between the 9 and the 30. The parabolic below the most recent bar, trend is still up. So we're getting a little bit of a correction here. We look now at the best choice chart to see some other stuff on it. So here's the what we call the extreme lines on the best choice chart for Apple, and we can see that it's now overbought at the upper 90% line. And when we look at the seasonal, we can see something else. We can see that we're going into the best time to be owning Apple between October 7 and October 23. So if you're trading it, that's a good time to trade it. 90% of the time you have a winner of about 3.6% on average. Let's take a look at another stock, Facebook. Here's a weekly chart of Facebook. What we can see here is that Facebook is in an uptrend as well. 4 above 9 above 30. Parabolic below the most recent bar. We hit the 2.7 standard deviation line after this nice move here, and it's consolidating. MACD is nicely situated above the zero line. Shiken money flow still looks very strong, and the other two indicators here looking really good. Let's take a look at the daily chart. On the daily chart on Facebook, you can see that nice move we show on the weekly, and then it's consolidating here. So we'll turn now to best choice. On best choice chart, on the extreme chart, the regression channel, we can see that Facebook hit the 90% line, meandered a bit above and below it here, and then pull back to the 50% line. Right now, the extreme level is 47, so it has room at the top. However, it's likely you could see some more pullback here. On the seasonal, let's see what is the best time to be buying. It's very similar to Apple, from October 10 to October 24th. So we're going into that period after the summer, going into the winter, where Apple and Facebook are stocks to own. I own them. I'm not selling. I'm holding. Another stock I own and I intend to hold is Visa. Um, I intend to hold these even through this correction, because you never know when this market will turn around again. And if you miss the 4 or 5 good days in a year of an up move in the market, you miss most of the move for the year. So right now, when we look at the weekly chart on Visa, uptrend, 4 above 9, 9 above 30. You can see that it's sort of riding this upper Bollinger Band, parabolic below the most recent bar. So we have a nice uptrend, MACD above the zero line, etc. All these indicators looking pretty positive. And let's look at the daily chart. On the daily chart, you can see that we had a little bit of a pullback here, but since then we've come up again and we hit the upper Bollinger Band and consolidated a bit. Let's take a look at the best choice charts. On the best choice chart, the regression channel, you can see that Visa is riding this overbought line, this 90% line. It touched it, it went back to 50, touched it, back to 50, and now it's pulling back a little bit here. It's now at the 92% extreme, so don't be surprised to see a little bit of a pullback even to the 50% line again. Let's look at the seasonal. On the seasonal chart, we can see here that one of the best times to own this stock is in January, end of January, going into the first couple of weeks in February. But if we look at the second half of the year, this is what we find. We find October 25th to November 8th. Okay, those are the time frames. And about 70% of the time you have a 5% gain, average 5% gain. So 7 out of 9 years. It's only been 9 years. And the 2 losing years were 2013 and 2010. So let's look at something else. Now I see Visa as a sort of a play on Amazon. I don't want to buy Amazon at $1,000 a share. And everybody who goes to the internet to buy stuff, they're using either Visa or MasterCard or some other credit card. But I think Visa is a good way to play the retail internet market. Here's a weekly chart of Berkshire Hathaway, the B shares. As you know, I own it. In fact, I bought it here at about 75, rode it all the way down, and it's a long-term holding for me. I'm intending to make this a core in one of my accounts. So now I'm back in the green, thank God, thank Berkshire. And it's at 177.56. I think I'm a little bit in the green here because I bought around 175. In any case, trend lines are above each other. Parabolic is now below the most recent bar. MACD is in bullish territory, and so on. But let's take a look at the best choice charts. Actually, let's look at the daily chart first. You can see that after this nice run up, we had a bit of a consolidation. So it looks as though we might make another move up from here. Parabolic's pretty close to the most recent bar. Let's take a look at the best choice. Now on the best choice regression channel, you could see that it is at that 90% line overbought. It's exactly at 90.2. So likelihood is a bit of a pullback, but I'm not going to trade Berkshire. I'm going to buy and hold for an extended period of time. So that's what I'm going to look at. Maybe the seasonals, we could take a look. And on the seasonals, the best time is usually to own it, if you're trading it, would be between November 20th and December 6th. And if you wanted to get a longer term, we put 56 days in here, and we see what we get. And that would be earlier part of the year, between January and March. So that brings us to the end of the video. I hope you had a good weekend, and we'll try to do this again next weekend. Have a good day. Bye-bye.